Oh, wait, I don't want to leave the train. Ashley?
Yeah, you're on.
Okay, can you?
Hi, folks. Brian here, and just wanted to thank you for coming to my webinar. This is a conversation that I'm going to be having with all of my clients between now and the end of the year, and it helps for me to take care of a bunch of people at the same time. So I really appreciate you coming in and taking a listen. I'm here with Tom Gaffney from Choice Administrators, and Tom and I are going to be talking a little bit about what you all can expect with your group insurance coming up in the fourth quarter. With the last couple years of first grandfathering and then grandmothering, many of us are still dealing with plans from 2013. And California law is that we have to move forward into the new ACA, Obamacare, health care reform, whatever you want to call it, type of programs. And I just want to go over what we can expect price-wise, plan change-wise, and a little bit about how some of the different carriers will be handling things. Talk to you a little bit about what my favorite plan out there is right now, which may or may not work for you, but I want to bring it out there in broad brushstrokes. Having said that, I want to bring in Tom.
Hey, thanks, Brian. Appreciate that. First of all, I'd like to tell you how much I appreciate being given the opportunity to talk with you and your clients today. Certainly means a lot to us from a CalChoice perspective to be able to partner with agents like you and talk about what's going on out here in the marketplace today, and to talk about CalChoice as a possible solution and some of the things that we're doing. And thank you to everyone who's out there and you took the time to be on the call today to listen to me and hopefully allow me to provide some insight as to what's happening out in the market, as well as put a solution in front of you that appeals to you and your employees. As everyone knows, we've been going through a pretty dramatic change within the healthcare industry. Over the past couple of years, the ACA has really turned our business upside down in a variety of different aspects in a variety of different markets, the small market being one of them, which today is defined as a 2 to 50 market, which most of you belong to, and moving forward it will be defined as 1 to 99. So what's happening in that marketplace, we're seeing a lot of different things. One of the big things to come out of it, however, is the whole idea of exchanges. And that's the essence of why Brian has invited me here today, to really speak to you all about the private exchange market, who California Choice is, and the current climate in the marketplace today, and just a possible solution, maybe just another arrow in your quiver, if you will. We are a private exchange, and hopefully I can give you a little bit direction and a little bit of insight here.
And a quick housekeeping issue before I forget. If you have any questions, you can type them in your chat box, and we probably won't tackle that until the end. I plan to have you in and out here in about 30, 35 minutes, but we can hit the question at the end, and then, of course, I'll be calling everybody in the next couple of weeks, and we can talk one-on-one at that time.
Okay, yeah, sounds good. Thank you. So, as you saw, I kind of moved past that slide here. I didn't want to spend too much time. I know we all have things to do today, and again, I appreciate you being on here. This slide is just to give you a snapshot and let you know why we are here today, and we are building a better solution in an evolving healthcare market. And you see the snapshot of the carriers here. I'm going to get into a little bit of what that means. But right now, I just want to focus on the state of the market. And I think before we get into that, it's relevant for us to spend a little bit of time talking about what the market looks like today, and what is an exchange, what does that mean. I guess just a quick 30-second elevator pitch of an exchange is it's the ability for an employer like yourself to really define your budget and what you want to spend on health insurance this year, and then allow your employees the choice to pick their doctor, pick their facilities they want, and look at that with different price points and make a decision that's best for them and their family. And as a combined effort from an organizational standpoint, you'll be making sure that you're covered. And on the employee side, they'll be given truly an opportunity to look at their doctor and make sure that they can keep their pediatricians and doctors. So, prior to, about a year ago, for a 12-month period, when you turned on the news, you really couldn't hear anything without hearing the word exchange. There's no denying that exchanges are more popular than ever. And quite frankly, there are other exchanges out there. There's other organizations that use the word exchange. And we're going to talk to you a little bit about why it's so relevant in the marketplace and why they are popular. Last year or the year before, if you decided to put off your plan and grandfather and grandmother and keep your plan for another year, that's great. Obviously, now that we're coming to the tail end of that, we can see that there may have been some consequences. And one of those consequences is the market is pretty heavily loaded. I'm sure Brian can agree that coming into the 12/1, the entire marketplace is going to have a big influx of companies that have to make a decision, and just that alone really puts a load on all the carriers combined.
Well, to jump in, I may be stealing your thunder, sorry if I do, but I read something recently that there are 278,000 companies in California that are eligible for small group insurance, and of those 278,000, 230,000 of them are renewing December 1st. So, 80% of companies, 75, whatever that math works out to be, are renewing on the same day. And what that means is if you're one of them and you turn in, an employee changes from Plan X to Plan Y, even with the same carrier, much less, changing from, Anthem to Aetna or, whatever carriers you change to and from, it's going to be a nightmare because the last couple of years we've seen, I know last year, this time of year, I'd call a carrier and be on hold for an hour and a half.
Absolutely.
And I think we're going to be back into that if we wait until November 28th of this year to do things.
Yeah, absolutely. You're not the only one. Even myself, just trying to add a helping hand. There was a few instances where I was on the hold for multiple hours. 5 o'clock hit, and the phone disconnected.
Yep.
And you'd think that I would have some pull because of where I'm at, and the truth is nobody has any pull when the market is in that state. Okay, and so the reason why we're talking about this, it's to inform. It's not to drive fear. It's to encourage and raise an eyebrow to hopefully show some proactive options that you can make for your company, and just kind of guarantee that your applications and everything that needs to be processed for your renewal gets done in a timely manner, and you don't become one of those companies who gets to experience the 11th hour. Mm-hmm. Correct? And thank you for knowing the math on that, because you were right on the money. 30% of the marketplace is on an ACA plan, and 70% of the marketplace, which is the 235,000, that's how many companies have to make a decision, and that's a big deal. And that's not the only concern as far as bogging down the marketplace. I'll definitely get into another marketplace that's going to add to that. Now, one of the other changes in the state of the market coming onto the ACA plan that we want to consider is network realignments. It's worth noting that networks are tied to specific plans, and the ACA has limited the carrier's ability to price their risk. So what does that mean? Well, if you're on an older plan and you haven't morphed onto an ACA plan, that means that your plan and your risk tables are based on what they call RAFs. And we know now that RAF is it's a broader pooled risk, and with the ACA taking away the RAFs away, the carriers haven't really had enough time to forecast their risk tables. They've only been able to maybe project a little bit with their risk tables and their rating, and so they've created rating areas, and they took away just age banding. Now everything's basically birth date and rating areas. So the way they've had to realign their networks in order to stay competitive has had an effect on plan design. So networks and plan designs are definitely one of the drivers and one of the things that people consider when they're making their healthcare decisions. Another thing to consider in the plan design are formulary changes. not being able to assess the risk again on the carrier side, that they've had to make changes in their formulary lists. Now, some of you out there may have had a friend or a family member, could have been yourself, or you've just heard a story around the campfire of maybe somebody being in their plan year, they needed some sort of maintenance medication that they've always been able to go in and refill, and one of the months that they went in, their formulary medication fell off the list, and if they wanted to get that medication, they were all of a sudden on the hook to pay their calendar year deductible and to pay the higher formulary fee. These are things that we don't have control over, and that's one of the things that employees are considering when they're making their choice to find out what health plan is best for them. It's not only the network and the doctors and the facility, they're going to be panning down a little bit on the plan design and finding out what they're on the hook for for the formulary.
Well, and to take this from my perspective as a broker, where I'm helping the group and the individual employees, it really has turned from, a couple years ago when it was based on, the decision was based on price and then just the broad brushstrokes of the plan design.
Right.
Now it's turned to the most important question is who's your doctor, and you want to keep being able to go see them. Most of my clients are here in San Diego. I believe everybody on this webinar is in San Diego County. And here in San Diego County, you have Sharp, and you have Scripps, and you have Kaiser. Correct. And those are like the three big players. Yeah. And, Sharp and Scripps have gone different ways. It used to be they took all plans from all carriers. They don't as much anymore. The good news is they do still pretty much in the group market. But on individual insurance, Anthem, Sharp takes Anthem, and Scripps takes Blue Shield.
That's
and
right.
Not between. There's no crossover.
That's right.
And that's the individual market. But in group market, we're seeing breakdowns like that, not as distinct, but it's happening. And that becomes one of the most critical elements is who's your doctor and what medicines are you on? And that's now, to me, the driving questions of insurance.
That's right. That is the driving question. And I guess the question that becomes a concern that populates another question from an employer's perspective is, okay, so if we know all these things, how do we balance these tiers? Choosing the tier that has all the different plan designs, and how do we balance that with getting the employee's needs met? And from an organizational standpoint, how do we balance our budget? So we believe at CalChoice and our portfolio and our private exchange, we believe that we can help with that.
Before you pop on to the next slide, I want to go back and I want to cover one that kind of got skipped, and
Sure.
I want to cover it in a way that answers business owners' questions that I'm guessing is one of the big reasons they signed up for this webinar.
Perfect. Quarterly
Rate actions. I just want to hit what the rates are looking like moving forward into quarter 4 and moving forward into 2016. It's really funny because about 10 days ago, Fox News came out with a thing that said, rate increases are huge, and we're seeing 60% rate increases. And literally the next day, MSNBC came out with a report that said, we're seeing small rate increases, and we've seen a decrease of 4%. Now,
Okay.
I'm a broker, and I work in the industry. And
They're
I
conflicting.
said, and you got the same topic with two very different, well, of course we're talking about Fox and MSNBC,
Sure,
right?
sure.
And really, the Fox report came out, and there was one Health Net plan here in California that is getting 60% rate increases. Now, I happen to have 2 clients on Health Net because for the last couple of years, Health Net's been dramatically cheap. And I told them, I said, we can move you to Health Net, but I guarantee you within a year or two, we're going to be moving you away.
Are they on the pre-ACA plans?
Yes. And one of the clients just got a 41% rate increase, and the other one got a 35%. And I've heard of brokers saying 60% rate increases with certain plans.
And that's from when they're crossing over from non-ACA to ACA.
Correct. And,
Okay.
and they're on the old Smart Care program, which was a very small network, and it got shut down. And what we saw there was literally Fox since admitted, yeah, we found this one plan from Health Net that went up 60%, and that's what we quoted. The flip side of that is MSNBC, in their story, came out and said, we've seen a 4% decrease. Yeah, there's one plan with Anthem that went down 4%. I take those extremes and throw them out. Here's the numbers that we're looking at. In the individual market, the average increase this year is 4.5%. In the group market, it's about 7.5%. Does that mean that your plan, if you're on a group plan, will go up 7.5%? No, as with any kind of average. I'd say the tight the renewals that I have seen this year have very consistently been between 5 and 9%.
On ACA plans.
I just had a group that was a non-ACA plan with CalChoice did an 8.8% increase.
Okay.
And that was a non.
Okay.
So not bad. But with any kind of average, you might be an outlier. You may be on a plan that is getting a higher increase. Whatever plan design that a carrier is saying, we want to motivate people to move from this away from that, and they bump it up a little bit more.
And taking into consideration also how the plan has to look with the minimal essential coverages implemented in there, it really has an effect on the plan. And the higher increases you'll really see from the plans that were non-ACA coming into a plan that's ACA, and I premised that when I was talking about the grandmothering, and that's great that everybody got to grandfather and grandmother for the last couple of years, but there are some consequences.
Right. And now to put what we just said into English instead of insurance jargon, the older plans, the plans that are still from the 2013 plan design, when you grandfathered into at the end of 2013 and then you grandmothered at the end of 2014, here we are at the end of 2015, and you've still got the old plan designs.
Yes.
Part of what Tom refers to when he says ACA, MEC, what's that?
Minimal essential coverage.
Is you have to have your annual physical coverage. You have to have,
certain ambulance coverage, pediatric dental, pediatric vision.
Even if you don't have kids, you have to have pediatric dental and pediatric vision, and it's all built into your insurance. But there are things that are now mandated. I'm not making a political statement here one way or the other, but there are things that are now mandated by law that have to be in your plan, and those are all getting put into your plans. It makes the plans better. It also adds a few dollars to them.
Well, and back when this was all implemented, our president did make a statement, and we all heard it, and it can be archived and replayed, that everyone was going to be able to keep their plans. And I hope everybody knows by now that just simply wasn't a true statement.
The plans got changed.
The plans got changed, and we're seeing some of the carriers now. We talked about the risk tables and how they had to realign how they rate risks and things like that. This is why some plans you see major increases, other plans you see other types of increases, and then they come out with some of these the average increase. But really, if you're on the phone here, you have a plan, and it's only going to mean whatever increase you have, that's what it means to you. Mm-hmm. And so I really want to just have a glass half full perspective on what we're trying to accomplish here, because right now we are in the midst of the fourth quarter is at our doorstep, and I have not answered one of Brian's questions yet, and that is, how do the rates look? How do the rates look for the fourth quarter, and how do the rates look for 2016? Mm-hmm. Now, how do the rates look for 2016? Nobody can answer that right at this moment. Mm-hmm. The only thing that I can tell you about that is in regards to the 51 to 99 marketplace coming in to the market, they are going to be considered small group in 2016. Yep. And some of the dialogue that we've heard back from the carriers is that they believe that it's going to be more competitive to rate them in the small group instead of having them on composite rates. It's actually going to be more competitive to rate them in small groups. So that's just some of the dialogue. That's by far, we all know things change. We're not at 2016 yet, so that's as detailed as I can get about that answer. Now, to answer the fourth quarter rates, we do have our rates available, and what we've seen is quite a few carriers have given us a rate pass.
Rate pass means no change.
A rate pass means no change in English. And there is, I believe, in some rating areas, we do have one of our carriers went up a couple points, and that's United Healthcare. Okay. They went up a couple points in a couple areas, but if we want to talk about an average, we're pretty level. It looks like third and fourth quarter are about the same, with exception of United Healthcare. But what I do want to make a point of, and this is why I'm teeing this state of the market subject up in this way, is I want to help you raise an eyebrow about, when do you want to do your renewal? When do you want to go through the process of making the change and getting your applications filled out and getting your applications processed? If we know what we know about the rates, and we know possibly for all I know, maybe before you were asked to move your effective date to 12/1 in order to take care of the grandmothering and the grandfathering. I'm sorry, the grandfathering and the grandmothering. For all I know, you had a different effective date, and you used to be comfortable with that.
Most of my clients did.
Right.
I have one client who used to be December 1st, and now I got 40.
Right. Correct. So who knows? Maybe there's someone on the phone call today that used to have a 9/1 effective date, and it might be more comfortable for you to have that 9/1 effective date. Now that you know there is an advantage to stay on 12/1, you might want to go back to what was comfortable. Now, there's certainly maybe a drawback to that would be you're coming off your old plan a little earlier, okay? But coming off your plan is inevitable, and one of the benefits to that is going to be to avoid the service issues and the absolute load and the burden that all of these carriers are going to have with the 235,000 companies that are most likely going to wait till November and December to make a decision. Would you agree with that, Brian?
Absolutely. I see it every year. Everyone waits till the last minute.
Yeah.
And this is going to be truly a case of everyone waiting to the last minute. You've got 70% of the companies in California doing the same thing at the same time. It's going to be a mess.
Yeah, it is. And honestly, being here and having you on the phone here, hopefully you all out there can agree that we really are trying to just help you think a little differently. We want to help you be proactive, and we really want to be the resource for you and help you get this done for for your employees, and help us get this done for your organization, and just make sure that you don't become part of some of the things we experienced last year. We just really want to encourage you and just help raise an eyebrow and help raise an awareness of what's going on. So, but let's talk a little bit about moving toward 1 renewals. As I said, obviously there could be a drawback or two, and that's just starting this early. But you are still faced with the decision, and it's at our doorstep. Do you want to move off the 12/1 cycle and maybe renew September 1 or October 1 or even November 1? There's a few reasons why you may want to consider. I guess the first reason we already covered. Brian so diligently did the math already and let everybody know what the marketplace is going to look like. And again, hopefully this raises an eyebrow of the monumental task that has been put on all the carriers and also all the brokers like Brian out there who truly they're in the business of doing a good job for you, and the task is heavy. Also, another reason to consider maybe moving off your 12/1 a little early is to avoid the time delays. What do I mean by time delays is if anyone remembers last year, I had some experiences where some employees didn't get their ID cards for 45 days, 50 days, 60 days. Now, the carrier went ahead and took their premiums on time, but getting their prescriptions filled meant their information had to be populated in the system,
right.
and some people ran into some challenges, which made those phone calls happen that we had to make, that we would get disconnected on. And
I received a few of them.
Yeah, and so did I, because it's my job to also help, and I got to experience that as well. And this is something, what's different about this December is now that we saw what happened, here we are today, and hopefully this just raises your eyebrow and helps you consider, at least for some of these reasons, why you may want to move off your 12/1 a little bit early, or at least just get your applications filled out early. If you're comfortable with 12/1, that's fine. Why not get your applications done in October and get everything submitted? What do you think, Brian?
We're here in the middle of August, and I have not received my 12/1 renewal information yet. So I don't have rates for people, so we can't do anything in August. But come early October, certainly I will have the rates early September, I'm guessing.
From a quoting perspective, rates, but for comparative purposes, in order for you to do your due diligence, you still need to get your renewal, right? Your
exactly.
letter. So we're already seeing just a little bit, kind of a little taste of the carriers. They're a little bogged down. Now, we're coming up to a bullet point that I hadn't gotten to yet, and it's something to consider, and this is part of the reason why things are already moving a little slower than a little molasses put in the blender, right? And that is the 51 to 99 infusion.
Mm.
Okay, now some of you may or may not know this, but the 51 to 99 marketplace, they are going to be redefined and they are going to become part of small group, which is the market that you're in right now. So starting in January 2016, small group will be defined as 2 to 99. Now, here's the thing about the 51 to 99 group. They look at their renewals 4 to 6 months early.
Right.
Okay, so right now, that marketplace already knows that they have to make a decision, and they know that they're going to be small group. They've been already infused into the marketplace, and they've already been tapping the resources of the carriers, and they've already been requesting all their spreadsheets and their breakdowns and their worksheets.
So the group of 98 is being lumped into the same pool as the group of 2.
Correct.
And the group of 98 has had their information already, and the group of 2 has not seen it yet.
What they're doing is they're being able to at least look at the plan designs,
right.
and they're being able to look at the rates.
Right.
Okay, they might not have got their renewal yet, but this is still some of the diligence that they do on the front end.
Sure.
And they're basically tapping into our resources, right? The small group market, they're in here tapping into those, and since they look at their stuff 4 to 6 months out, this is part of the molasses that's been put into the pot, and it's happening right now. And it's something that we can't control, but being aware of it is something that we can control, and that's why we're here today. I want everybody to be aware of these things so that you can really consider what's best for your organization, and it also helps Brian have that dialogue with you, because my expectation for this is for everyone here to have a fundamental concept and to understand enough of the language in a basic way where you and Brian can actually have a conversation and both of you understand what's going on, and Brian isn't having to wonder if you understood and you're making the decision. So yeah, those are some of the reasons why you may want to consider moving to a 12-1. Also, again, maybe possibly if you were on a 9-1 before, you got an opportunity to go on a 9-1. Maybe you were on a 10-1 or even an 11-1, bumping it back a month. If those were your original plan years, then it might be an opportunity for you to get back to your comfort zone.
Well, and at the other end of the spectrum, I had a group that I talked to yesterday, a client of mine, that used to be a March 1st effective date, and they loved March 1st. It was in conjunction with their fiscal year, and they just like doing that kind of stuff in the spring or whatever. And they made the decision yesterday that what they're going to do is renew as is, but then change carriers come March 1st. They already knew they wanted to change a carrier, and they're just going to check the box to say renew, and they're going to grin and bear it for 4 months. Whatever they get is whatever they get.
Yep.
But we already know that in January we're gonna hunt that down, and we're gonna look and see what they want to do come March 1, and they already know they're going to move.
Because they want to go back, and
unfortunately we can't extend out anymore. I mean, they were asking, can we take this year and extend it, instead of having the renewal happen December 1, have it happen March of next year? No, that's 15, 16 months, and no, you've got a 12-month year. You can't go any further than that.
Correct.
So that's why they're just renewing as is, but they're going to renew without even looking at it. They don't want to get stuck in the molasses that we're talking about.
Sure.
They're willing to just check the box, take what they get, but reshop it early next year. And that way they get back onto the cycle that they're interested in, that they like having.
I mean, if their fiscal happened to be where we are now, then that would have been perfect timing for them. Mm-hmm. And so for everybody out there, you see that being at a comfort level with your old plan effective date is definitely something to consider. Brian's got that story there. Now, coming off renewal and coming onto an ACA plan, part of the reason I'm here is to help allow you to see that there is a lot of positive outcomes, and one of them is being able to offer your employees more choices, being able to balance out the big concern of benefits versus formulary versus access to care and network, and how much is that going to cost me, right? So we really hope that this is something that you take away from this is just the glass half full. We've already heard enough negative information. We can tune into most AM radio stations and get that. We are here today to inform you and really to try to help you see the positives and take advantage of some of the things that we can just help make the process a lot smoother. Okay. So with that, let's just talk a little bit about CalChoice. I definitely, it's not my intention to make this an entire CalChoice commercial. I did want to make sure that we talked about the state of the market. I just want to talk a little bit about how CalChoice, the private exchange, fits into this equation.
Okay. Now, I'm going to steal your thunder.
Please.
Because I'm going to talk about you so that you don't have to talk about you as much.
Okay.
You ready?
I am.
CalChoice is my favorite carrier. I had written a lot of CalChoice prior to the recession. As you'll see in a second, CalChoice is a bunch of different carriers under one umbrella. You will never find more flexibility because Kaiser is part of it. Sharp here in San Diego is part of it. And you've got HealthNet, Aetna, Anthem, United now is part of it, United Healthcare. There's no such thing as a doctor who doesn't take, 1, 2, 3, or 4 of those.
Correct.
One employee can go on Kaiser, someone else can go on Sharp, someone else can go on a Anthem PPO. Huge flexibility. Prior to the recession, I had a lot of clients with CalChoice. Best customer service in the industry. Average calls answered within like 15 seconds. It's amazing. When other carriers were going 15 minutes, they were doing 15 seconds. But prior to the recession, the HMOs were 5 to 8% more expensive, and the PPOs were 12 to 15% more expensive.
That's right.
And when times were good and everyone was rolling in money, nobody cared. But when the recession hit, I would say I moved probably half of my clients away from CalChoice simply because the client said I need to save every penny that I have.
Absolutely.
Today, CalChoice is back to having, right now they have the same rates. And it's funny, I have a client that I worked on them with their October renewal yesterday, day before yesterday, Monday. And they're with Kaiser. And we set the CalChoice rates side by side with the Kaiser rates. The plan designs were exactly the same, and the prices were exactly the same. I mean, it wasn't like, oh, it's kind of like it, and it's a little bit less, or it's a little bit more. I mean, they were identical. And when I can come to them and say, this group happened to have, I think, 11 employees, and I said, does everybody love Kaiser? And they said, no, we got a couple of people who don't like Kaiser. I said, okay, if we moved them to CalChoice, your people who love Kaiser can keep Kaiser, but your people who don't like Kaiser can move over to Sharp or Anthem or whatever. And, she says, okay, same price, same plans, same plans. And that's what I love about CalChoice. And now, I'm sorry if I just stole your thunder, but that's why I love CalChoice.
Honestly, you are an evangelical, and I appreciate that. And I certainly hope that, that resonates a little bit out there. Of course, I am from California Choice. I'm a regional sales manager, and obviously, I love CalChoice, right?
You get paid to.
I do. But when we talk about the climate and the environment that we're in right now in the marketplace, there's a lot of moving parts. There's a lot of uncertainty. And as a private exchange, I mean, I'll tell you, Brian just hit probably most of my main points, and I appreciate that because now I don't have to do it. But just so everyone's clear, California Choice is the original private exchange in California. We were the first ones to build it.
Before it was law that you had to do something
That's right. That's right. First ones to build it, and Brian's got a lot of history with our company. First one to build it. We are the most experienced, and candidly, all these other exchanges you hear about, even the state exchange, federal exchanges, prior to ACA, when exchanges were being formed, everybody looked at California Choice to try to emulate. And that really should speak loudly as to how experienced and how solid our exchange really is, because everything that people are being told to do, if they're going onto the exchanges, they've been emulating California Choice, and there's a reason why. And because we have the stability, and we don't have some of the hiccups that are going on out there. One component that's not on these slides that I really need to mention, and because Brian was nice enough to cover some of my points, it opened up. It opened up a minute to talk about this. Is we're coming into the new year, and technology always is something that everyone wants to know. Hey, how can you make my life even easier than it is? Coming into next year, we're going to have paperless electronic enrollments. We have tools that we are rolling out that we are out there presenting right now, and Brian's going to come out to our road show and come see that. We're going to have this available to you, everybody out there. Just a quick example. Let's say you have a new hire coming aboard, and they're going to be eligible for benefits. This employee is going to be able to receive an email with a link, and that link is going to take them to their own page within our portfolio, and they're going to have a worksheet already generated for them, and they're going to have an option to either just look at the plans and look at the different rates, and also type the name of their doctor and pediatrician in and narrow it down like that, or they can go a step further, and there's an option where they're going to be able to click and take a kind of a questionnaire, and the question is going to ask, how many times do you go to the doctor? How many times, do you think you might go to the hospital? How do you use your insurance in this way, that way? The reason why this tool is so valuable is because sometimes people want to know, okay, I know my premium costs this much, but when I actually start using my insurance,
what's going to happen?
What am I in for? So we have developed this tool, and it's an option. You can do it or not. For those employees that really want to get the most out of their plan and actually use this tool to find out if it's actually worth more to maybe pay $15 more in premium and save themselves a couple $1,000s in coinsurance, it's designed to say, okay, if you have Plan A, and you're planning on using your insurance this way, these are your habits, these are your behaviors, here's what your plan should cost you as you answer these questions. This is what your premium is, plus what your expected out-of-pocket costs are as a combined. This is what you should be on the hook for in a year. Then it also has a worst-case scenario number, just in case things get a little bit more active than you didn't anticipate.
Those things happen and they get in a car accident.
Correct. It shows what your worst case scenario is. So now, not only are you able to balance looking at making sure you're going to have your correct formulary, your maintenance medication, making sure that you get to keep that doctor, you get to keep that pediatrician, you get to keep the facility. Now you also get to go and find out what plan really fits your usage and how you use insurance. So these are things that are part of our portfolio and part of our exchange and part of our technology, and those are going to be available to everybody here on this phone, and we'll certainly get into that another time. It was a great opportunity for me to just add that in because this is something we just rolled out.
Okay. And the roadshow that you mentioned is for brokers only, and I'm attending the roadshow next week, next Thursday, so yes. I will know more about this in a week.
Yeah, that's right. Brian's going to be armed and ready, and so everybody knows out there, we have an account management staff, and anybody who's going to want to know more about this, and they talk to Brian about it, Brian is going to be able to request an account manager to come out and show anybody how to use the system. Okay, so that's something to look forward to, and that's just us keeping up with the times. Now, Brian,
I'm going to rephrase what you just said because I disagree with you. That is not CalChoice keeping up with the times. That's CalChoice leading because no other carrier has that.
Thank you for saying that.
Yeah. I work with all the carriers. I've got clients on this call with just about every carrier looking through the list, but I don't know another carrier that has something like that.
Well, there are, I used the word emulate earlier. There are going to be other organizations out there that use the word exchange, and they talk about technology, and really what they are is they might have one carrier solution, maybe an ancillary and a voluntary benefit type of solution, and then throw in a single source billing solution, and then clump it together, and they could call themselves an exchange. There are some organizations out there emulating, but I appreciate you highlighting that. We truly are the only private exchange in California that has all the nuts and bolts that we have correctly placed, and we're a well-oiled machine. And it's because of the experience we have in the industry. So I appreciate you saying that, Brian.
I'll use a real-life example. Last week I was doing a renewal for a client. It's actually the client that I mentioned that was with HealthNet that received a 39.8% increase, so they had a small heart attack.
Wow.
It's the two-employee group. They both happen to use Sharp here in San Diego. So I looked at Sharp plans for them. I looked at CalChoice for them. And I looked at other carriers, but it came down to those two. The thing that made them, they're a new group for you. They will be signing up with CalChoice. But the thing that made them do that was with Sharp, the two employees, as a two-employee group, you can offer one plan. And so the two employees had to go on to the exact same thing. And you've got one of the families is very high utilization. She wants a platinum plan. The other one didn't need a platinum. She wanted a gold. And we had to decide which one of those two do you want to do with Sharp. Whereas you take the exact same plans for the exact same price with CalChoice, and one was able to take their gold and one was able to take their platinum.
Yeah.
And just that flexibility made the difference.
It does, and it makes a difference with key employees as well.
Sure.
Okay, I mean, one of the biggest things that people do reverse interviews all the time when they're interviewing for a company. They will reverse it and ask, so I need to know
what benefits are available.
Yeah. How are you going to take care of me and my family in that way? And this is a great retention tool. This is a great recruiting tool. This is also a great tool to spread out the morale and make sure that some people don't feel like there's a carve out happening here.
Right.
And so this exchange, this private exchange, CalChoice, we just inherently kind of achieve all those challenges, and we overcome some of the things that people face when they are pigeonholed into just going with one carrier. I mean, essentially, if you're with one carrier, you're basically being told, this is your panel of doctors, and these are the facilities you get.
And you hope it's a big panel of doctors.
And
sometimes it's perfectly acceptable to do that.
And in this climate, if it is a big panel of doctors, then you're going to be paying a big panel of money.
Now, I don't want to turn this too much, Tom. I apologize.
Sure.
You work for Choice Administrators, which is the parent company of CalChoice.
Absolutely.
Having said that, I don't want to turn it too much into a CalChoice commercial. My summary here, and I apologize, we've gone 15 minutes because we both babble about insurance a lot.
Sure.
And we've gone a little overtime.
Sure.
Here's an important page up on the screen right now. CalChoice, 7 health plans, Aetna, Anthem, HealthNet, Kaiser, Sharp, United Healthcare. Western Advantage doesn't help us down here in San Diego. The others do, and my understanding is, while I can't say it officially, there's another carrier coming on soon?
Yes, and that is in the northern region. They will be.
I didn't know that.
Yes.
Okay.
That is
Doesn't
a
help us here in
carrier.
San Diego.
It does not.
Okay.
But if anyone here has satellite employees that are up in the Sacramento area, there's going to be just another great option. Even though Western Health Advantage is right up there, head to head with Kaiser,
right.
And HealthNet is pretty popular out there. We just added just another amazing sprinkle to the cupcake.
Okay,
yeah,
good.
for Northern California.
Good. There are, 14 PPOs, 58 HMOs, a bunch of HSAs. Lots to choose from.
Essentially the point of this slide here is to let you know that your employees will be hard-pressed not to find their doctor and facility. Again, we ask every day, and we get the same answer all the time. If I can help you find your doctor and keep your facilities and find a reasonable price point, do you care what color your ID card is? Right. The answer is no.
Right.
Okay.
So having said that, I mean, really, in my mind, to summarize, and I apologize.
Sure.
I mean, we've got
along.
I'm sorry about that, but
That's
we've got the tiers, and all the tiers are available. Blah
yes.
blah blah.
Yes.
But what we're looking at, fourth quarter. You're welcome as a client to keep your 12/1 effective date. Just know we want to take care of that paperwork sooner rather than later.
Correct.
If you're making changes, don't be turning them in on November 29th. First of all, it's my birthday. Again, that's November 29th.
I better make a note of that.
Yeah, make a note of that. But it's just we're going to be up to our eyeballs in paper. Not just us on the broker. I don't care. Swamp me with stuff, but we're going to turn it into the carrier, and it's just that they're doing nothing for maybe a couple weeks.
That's the truth.
Yeah.
And please, everybody out there, I want to go ahead and be at Brian's defense on the front end. If you do wait till December to make your decision and get everything done, please understand that there's going to be things Brian cannot control. If you really take in what we're talking about today and you do want to keep your 12/1, please consider gathering your resources that Brian has for you, and let's get your paperwork processed.
Right.
I'll
be calling you in the beginning of October, and if we can do it in the end of October, that would be great.
Yeah. Now I know that we're at a bit of a time crunch here. With your permission, can I just talk a little bit about the value-added services that come with our portfolio? I'm gonna slide a little bit through the slides here. Okay. Some of these slides, these just talk about the top hospitals and things, but this page here, I know we're in a bit of a time crunch here, so Brian's given me a little permission just to kind of talk about why, when he gave the example of a group that was able to have Kaiser and have the same plan design and the same plan rates, well then why CalChoice, right? So this is one of the reasons why CalChoice. It's called our Business Solution Suite. Okay, so just for being enrolled on the medical, I'll just go through this real quick. Some of you out there, you might not have a full robust package, and people are paying for dental, or maybe some of your employees can't afford it. By being enrolled on the medical here, you're going to receive a free discount dental plan, free discount vision plan, and a free discount hearing plan. And all of our carrier partners in these plans are reputable partners. We have VSP for vision, Smile Saver on the dental, and Epic is the top manufacturer of hearing devices. Okay, so if anybody out there has a hearing device need, you can get up to about 50% on a pair of hearing aids. From what I understand, those can be $5,000 or $6,000. So we have a lot of value in back-end savings here. You're going to be able to pay for your benefits pre-tax via premium-only plan if you're not already doing that.
I think all my clients are.
Okay, yeah, and that makes sense, yep. Right? And as far as having your compliance hat on, we'll just make sure that you guys have those documents in your file. If you don't, I know Brian does. Another resource here, this is a big deal, HR Answer Link. Because of the time crunch, I'm not going to get into the nuts and bolts, but this is not a cookie-cutter HR resource. Right now, especially in California, laws always change. It's like an amoeba. You can talk to your employee one way today, and then you cannot talk to them the same way tomorrow. There's other resources. If you're paying for an employee handbook right now, you don't have to do that anymore. You can customize an employee handbook with our resource here, and it'll be shipped out to you. Okay. If your company is expanding and you need to figure out how to write a job description and put it out there, and then write an offer letter after that because you've never had that position before, we have resources. These are just examples of how the HR Answer Link works, and it's the upgraded subscription service you're getting with that. You're not just getting their little free thing. We're paying for the subscription for you, and you're going to be able to take full advantage of that program. CalPERS Employee Discount Program. This is kind of the fun part. It's a Fortune 500 type of discount package. So we've got discounts for all the major amusement parks. If you're in San Diego, my wife and I bought the Legoland season passes. We saved $40 on that. Movie tickets, we go on and buy them for $6.50. I'm a member at Costco, and they're $9 there. Okay, so that's just a quick example of the perks program. Everybody gets that. Prescription discount card. Let me know if you want me to talk about that. Okay, prescription discount card. We talked about formulary earlier. This is something I want to point out. If you are one of those people who do have the story that your formulary changed, and maybe even on the plan you have this year, if you go through a situation where the plan you picked, Brian and I can't control the fact that the drug company changed something on you and now you have to pay the formulary price, this prescription discount card will give you up to 75% discount on formulary drugs, and it works at pretty much every pharmacy. Any major pharmacy you can think of, we're on the list there. And I say up to.
Right. I've had a couple clients utilize the prescription discount card, and basically they called me back and said, well, the price I got with the discount card was better than the price I got when I showed them my card and asked and put it through insurance.
Yeah, you know, I hear those stories too. Yep. It's obviously not going to be everybody's story, and I just wanted to, I'm glad you were the one to say that.
No, I've had it happen.
And this is something that can be used either or. So I don't want you to misunderstand me and think I just gave you a supplemental card here. You can't use it on top, but if you get into that situation, just by being part of the CalChoice Exchange, you're going to have that resource available to you. We do have an HSA resource center. I won't get into the weeds on that, but we have a full resource center. Anything you need to know about HSA, you'll be able to find out here. And again, my account managers, if you really want to get into it and find out what it's all about, my account managers will come out of it. If Brian believes that that's something you decide you need, we're more than happy to send somebody out to help you. CalCobra billing. If you have an employee that leaves, the last thing you want to do is pay your payroll department to manage their invoicing,
bill, collect,
yeah, and all that, right, for their benefits if they choose to keep them. So that burden is off your shoulders. We will handle the billing for you. The thing we won't do, though, and we do not do, is we do not do the legal notices. That's something that's between the carrier and
Okay, so
the employees.
if somebody is signed up with HealthNet on CalChoice, HealthNet does the notification.
Yes, but it's the TPA of the company's job just to kind of follow up and make sure that that communication is happening.
Right. Okay.
Okay. CalChoice will not do that, but we will handle all the billing, which is the tedious stuff that you don't want to pay your existing employee to mess around with someone who's not there anymore.
Right.
Right. And the last thing I'll just talk about is flexible spending accounts. Those are a tax advantage way to utilize your insurance, and it can do all kinds of amazing things. In addition to your premium only plan, it can be another way to lower your payroll taxes and help employees who really want to get the most out of their insurance. It can help them have the tax advantage to use their insurance. Our company is called Connexus, and if it's something you choose to use, we will come out and set the whole thing up. We're not going to charge you for it. We have a full team that will come out and sit down with you and get that thing set up.
And a lot of my clients are already utilizing the 125 plan that I set up for them. The flexible plan, a few of you are sitting out there listening going, yeah, I know the plan he's talking about. It's called AMB, American Mutual Benefits.
Okay.
Connexus is a company actually that I worked for. My only job out of college was doing Section 125 plans and that kind of thing for the company that wound up becoming Connexus. It is the traditional 125 plan where you estimate your medical expenses, and they do a really good job of administering it. If for some reason we don't have you set up on a 125 plan and you wanted to do the traditional type, we can get you great free administration.
Absolutely.
And I can walk you through the details of that. But all it is taking your Section 125, your out-of-pocket medical expenses, and making them pre-tax.
Correct. And that's great for the employees. Every business owner wants to know, what does that mean for me? Well, the less you're reporting to your payroll taxes, the less payroll taxes, right? And that also has a positive impact, and it should, on your work comp premium,
right?
Because that's one of the elements used to formulate your premium, right?
Absolutely.
So there's some positive things to that, and so just to kind of add and maybe conclude the story Brian told about the company that looked at Kaiser neck and neck. Hopefully, you see just the value that a private exchange can have for you. I certainly hope that the information that you heard today just helps realize that we really are trying to provide a long-term solution. Okay, I hope everyone here can kind of look at this in a microscope, telescope type of situation, where a microscope is what's on our doorstep today. How can we balance all these concerns and questions out and have something that's going to work for us on an organizational standpoint, and then also keep our employees happy and possibly be a kind of one of our recruiting tools, mm-hmm. right? And then the other thing is, how stable is this solution, and how long can we keep it? And quite frankly, Brian mentioned at one time our rates weren't the most attractive out there in the marketplace. During those times, the average company that was on our books stayed with us for 6.5 years, even at those rates.
Which is 3 times the industry norm.
Right. Everyone usually switches every 3 years. Right. And a lot of the reason was just everything that comes with it. The business solution suite we talked about, the service that Brian talked about. Even for the fourth quarter, I'll have everybody know, we've hired an extra 60 people in our underwriting and customer service department to help you.
Good.
That's a big deal.
I will end with one last story because it's relevant to something. And by the way, if you're pressed for time, and you don't want to listen to me tell BS stories anymore, go ahead, take off. Thanks for coming. But having said that, I was on CalChoice myself for about 12 years, and I have a doctor here in Encinitas who I absolutely love. And during that, when it started off, she was in the Sharp system. Her facility, the whole facility, changed from Sharp to Scripps. And during that time, I crossed 40, and so was in a different age bracket. Sure. And different carriers like different ages, and so they kind of, some will give good rates to the young people, some give better rates to the older people.
Sure.
And because of different plan changes and my age change and her changing networks from Sharp to Scripps, over that 12 years, I had Blue Shield, which is no longer part of CalChoice,
right.
HealthNet, Sharp, and one other. Blue Shield, HealthNet, Sharp. Oh, and then Anthem. And then Anthem, yeah, because Blue Shield was gone. Right. All 4 at different times provided me with the best price on the plan that I wanted. And all I had to do was check a box at the annual enrollment, kept my same doctor, just checked I want to be on HealthNet this year. I want to be on Sharp next year.
One paper.
One paper instead of, there are many business owners, keep in mind, I own my business, right? When a business owner's doctor changes network, they change the whole plan for the whole company because I want to keep my doctor, so I'm going to make everybody change from HealthNet to Sharp.
And that's a whole new employer app, too.
Exactly. It's a whole new everything. It's meetings and everything. So instead of revamping everything for everybody, I checked one box on one form once a year and said, I want to be on this plan.
And it's that simple on the employer side as well. If the employer says, hey, we had a great year, I want to actually give 25% to the dependents. Now we're doing X amount for employee only. Let's give a little more for the dependents this year. If that's the case, it's the same thing. There's one change form. All you do is change your percentage, and that's it. It's that simple, year after year after year. And you're going to have an account manager that's always going to be there to make sure that everyone's making the right decisions, and that you're being taken care of. Of course, Brian's taking good care of you. We're the resource that Brian's bringing to the table if you're enrolled in California Choice.
Tom, we got to go because I want to let these people off the phone.
Great.
I appreciate your time.
Thank you.
Folks on the call, if you had any questions, they didn't pop through to us yet, and so I will get them and answer you one-on-one, email that messages back to you. I want to thank you for listening for what turned out to be an hour. I apologize for that. We're insurance geeks, so we get into this stuff.
Yeah.
But thank you for your time. I will be talking to each of you individually and all of my clients in the next, certainly 45 days to figure out how we're going to move forward and bully through this Q4 stuff and get you set up going forward into 2016.
Thanks again, everybody. I appreciate you allowing me to be here today. And Brian, thank you very much. I really do appreciate the opportunity to help out any way I can.
Absolutely. Thanks.
Thank you.